We like to always start off with some type of quote or cartoon, and once again, we're going to go to a cartoon. And if you're like many people in the market, it's often quoted that 90% of all people in the market lose. This cartoon might be for you, where you might want to go ahead and let your children or your dog choose your stocks or your currencies and see if they have any better luck than you with the latest indicator or fancy dancy guru. This is our second installment on Understanding Forex. In this video, we're going to focus in on understanding the Forex currency quote. Now, to do that, we have to talk about what are the actual major currencies in the market. There are basically 6 major currencies. They are the dollar, the Australian dollar, the British pound, the Canadian dollar, the euro, the Japanese yen, and the Swiss franc. These currencies make up about 85% of the daily currency volume. In our previous video, What is Forex?, we also let you know that 90% of all Forex trades basically involve the US dollar. These currencies are deemed the most liquid. So why don't we go ahead and take a look at 2 of the more popular currencies, and that is the euro and the dollar. Typically, you'll see that written as EUR USD, that is the euro dollar. Now remember, a currency pair is trading one for the other, where we have a base currency and a counter currency, or the quote currency. In this currency, we are looking at the euro as the base currency and the dollar as the quote currency. Now right now we see that the value of the euro dollar is at 1.2665. Now in video 3 in our series, we're going to talk more about pips, and those of us in the States aren't really familiar with the 665. We stop at 1.26, the hundredths value. But what's important for you to understand as you look at this currency quote is that 1 euro, if you wanted 1 euro of the base currency, $1 of the base currency, which is the euro, it will cost you 1.2665 of the dollar. So yes, that's why you have some people, many models and people wanting to be paid in euro, because the euro at the current time was valued better, but the euro has been in a lot of trouble, as we know. But again, in this base currency, quote currency, the euro versus the dollar, 1 euro will cost you 1.2665. Now, we'll talk more about that 1.2665 in the third installment in this video series of Understanding Forex, which is What is PIP? As usual, we're going to start off with a little cartoon here about investing and how some people have to almost give up their souls to be successful traders in the market. This is the third installment on our video series on Understanding Forex. We're going to focus today on what is a pip. Now, in order to understand what a pip is, we're going to review a little bit about our second series where we talked about what is a currency quote. Here we have the euro dollar, where the euro is the base currency and the dollar is the quote currency. Again, I encourage you to go to our second video in this installment to get more details, but this is our euro dollar. We shared that currently the euro dollar quote is 1.2665, and in that, the base currency, the euro, for $1 the euro is going to cost you 1.2665 in a dollar. Now, those of us in the States aren't really too much familiar with that 65, and that 65 has a lot to do with what is a pip. So let's get to that. Currencies fluctuate in fractions of a dollar called a pip. The pip stands for price interest point. A pip is the last decimal in a quote, so let's go back to that 1.2665. The euro dollar currently is at 1.2665. If we were to go up 2 pips, that would take us to 1.2667. If we were to go down 2 pips, 1.2663. You can see that last decimal point is where we gain and lose value. Now, in our next installment, we're going to talk about lots and where we can, and this will help you put value to how much is a pip worth. Well, it depends upon how much you invest, but first you have to understand how to calculate the value of a quote, and typically it's the last decimal in a quote. There are two, the majority of the quotes you'll see will have 4 decimals. There are 2 that only have 2, and we'll talk about that more again in our 4th installment, what is a lot. But we hope that this helps you understand basically what a pip is, looking at that 4th decimal in a quote. And as it rises and as it goes down, that's how we make money. And normally we start off with a cartoon or quote, and our cartoon today really feeds into this financial literacy. If you only take the advice of your broker, websites, newsletters, TV shows, buy, sell, there's nothing wrong with that. And I encourage that, and I sell some of these things. But you have to be literate. You have to be able to, financially literate, to be able to take that information you're being given to you, and determine whether or not that information is good, if it matches who you are as a trader, if it matches your trading style, so that you can determine whether or not you should actually take that investment strategy. So this is the first video in our video series on understanding Forex, and today we're just going to talk about some interesting facts. And as we go through the series, we're going to talk about what Forex is, how to read a quote, what is a pip, what is a lot. We'll really walk you through in some short, concise videos the basic information that you need to understand how to be involved in the Forex market. Now, when we talk about some basic facts about Forex, one of the most important things to understand, it is the largest market in the world. You can see over here on the left, we have our images, and our NYSE is around 74 billion per day. Tokyo is 18 billion. The London Exchange is around 7 billion. If you combine those together, you get a little under 100 billion, and that's nowhere near the 4 trillion volume that we'll see in the Forex market. And that volume is what allows Forex to be the most liquid market. And what's good about that, as far as getting in and out of trades, you can do that pretty easily because there's enough volume. You don't have to worry about whether or not there's going to be somebody else on the other side of that trade. The Forex market is open 24 hours a day, and that is 5.5 days a week. Basically, here in the States, we open up on 5 o'clock on Sunday Eastern Standard Time, and we close at 5 o'clock on Friday. Some other interesting facts about Forex is that there's basically no commissions. Most brokers work on a spread as how they work out their trades. Leverage here in the States starts off at 50 to 1. Internationally, you can get up to 1,000 to 1. 200 seems to be standard, but there's different leverages depending on where you're based. There's no floor, there's no trading spaces, runners, people standing around, because most of the trades are handled electronically. And again, what that allows us to do is to make sure that there's not a lot of manipulation. We have a lot of volume, even though there's big banks. There's so much volume and so much going on in Forex that you don't have to worry about manipulation. And the other thing is that the dollar is involved in about 90% of those trades. So let's talk about those trades. As far as the major currencies, there's the US dollar, the Australian dollar, the British pound, the Canadian dollar, the euro, the Japanese yen, and the Swiss franc. Those make up about 85% of the volume, but as we just said, the dollar is involved in about 90% of the Forex currency pairs. So the most popular pairs are the dollar yen, the euro dollar, and the dollar franc. So, as we said, this is the first video in our series on understanding Forex. Just wanted to share some interesting facts. We have what is Forex in our next video. What is a PIP? What is a currency quote and how to read that? And how do we make money with lots? All these are coming along, so please make sure you go to the next video installment. And I will see you guys next time.